the broader conversation of tax planning for Bitcoiners who have all these gains and maybe want to be able to have a lower tax bill at the at end of the first quarter in April every year. Like, it's something that stresses me out, this tax strategy. I'm lucky enough to work with the fine folks at Satoshi Pacioli. Shout out to Joe
Great
Wood
guys.
and his team. They understand Bitcoin, they understand accounting, and so they bring peace of mind to me. But even with that backing, it still stresses me out. Obviously, this is a company, TFTC, that runs on a Bitcoin standard. We have a Bitcoin treasury. Some of our revenue is brought in via Bitcoin over the Bitcoin protocol. We've got bills to pay. We've got employees to pay. So we're not at the point yet where we're holding all the Bitcoin. We try to make sure our stack's increasing year on year, but there are times throughout the year we need to sell, and there's just always this feeling of stress at the end of the year when tax season comes around and like planning around reducing the tax bill as much as possible. And this is a way to do that.
Yeah, and oftentimes that stress comes because the year's already over, right? You're in April 25. You're like, I can't go back and do anything different in, October of 24. So accounting is absolutely necessary, right? Getting your taxes right. Joe does a great job with his clients. We have mutual clients. Where we're a little bit different is we're often not like looking in the rearview mirror of what happened last year. We're looking 1, 5, 10 years down the road. Okay, what are the tax strategies coming up on the horizon? And DAFs are just, donor advised funds are a tool in that belt, right? Oh, we got X, Y, and Z in this case. Client's charitable. Maybe we need to look at doing a DAF and kind of front loading some gifting, choosing when we get our write-off for our tax situation. And then sometimes you're pairing that with other tools, right? So again, very specific case by case, but I'd say that's the major difference is a lot of CPAs are like, okay, what happened last year? Let's make the most of it. Good financial advice is looking 1, 5, 10 years down the road and be like, ooh, if we make this move, you're probably saving tens, if not hundreds of thousands of dollars, just from a tax perspective. It's not like a matter of opinion. Doesn't matter if Bitcoin goes up or down or sideways, that there's just structural things within the tax code. And you say, oh, okay, this exists. You need to do this, this, and this. You've got a better situation. And oftentimes that's why people are signing up with us, because it's not a matter of opinion. Kind of just point to the numbers like, hey, we can save you X and we charge Y. It's pretty easy to say yes. So
let's walk through an example of this. Like, what does this look like 1, 5, 10 year time horizon? What's an example of how you would prepare for that tax strategy?
Big one is retirement. And you'll have folks like working, high tax bracket, 1 year, turn it off, right? Just drop to like super low tax bracket. And so when we're paying a high rate and you've got a low rate now, sometimes you're doing Roth conversions, taking money from an old pre-tax account, choosing to pay taxes early, get it into a Roth IRA account, and you're paying a lower rate on those taxes. So kind of, I like to point out to clients like a Nike swoosh, right? You're making a lot of money, went down in a dip, and then in your 70s, you hit this government requirement called a required minimum distribution. Kicks in around age 72, 73. But if a client has a very large pre-tax IRA, and some of ours have, Bitcoin in them, right? And if Bitcoin does what people think and hope it could do over the next 10, 20 years, you're having to take that required distribution out of that pre-tax IRA. It starts at around 3 or 4%, but a lot of the scenarios we model, clients are likely approaching the highest tax bracket that exists. And so you take that opportune time while they're in the dip of that Nike swoosh, like, hey, let's choose to pay some taxes now or this lower marginal rate, get it into Roth. And then that Bitcoin is going to sit tax free for that client's life. It can be inherited by the spouse tax free and then kids as well. So that's a big one. That's where I've seen 7-figure tax savings.
Really?
Okay, if we're just looking at, same to assume Bitcoin growth rate between whether it's in the pre-tax or Roth, but then you're just arbitraging the brackets there and making an opportune move when clients are at a low rate. So that's a big needle mover. Sometimes we're pairing a Roth conversion with a donor advised fund, right? As you're bringing those taxes from pre-tax to Roth, it's kind of increasing your tax bill. You're settling up with Uncle Sam, really, right? Hey, I've got this big IRA. I'm going to settle up with Uncle Sam. We'll move from pre-tax to Roth. That creates income. You can actually knock that income back down by doing some DAF work, right? Let's pre-fund our, charitable giving for the future. So just tools in the belt, like knowing how the existing system works. What are the advantages and disadvantages of these tools? Arbitraging brackets, and then using all that together with the client's goals in mind. It's kind of, high level.
Yeah.
That's what it looks like.
Hey, do you still have your Bitcoin on an exchange? Don't hold your Bitcoin on an exchange. Take it into self-custody. If you're looking for an easy way to do that, we have the BitKey. BitKey is Bitcoin made easy to use and hard to lose. Take the first step, get your Bitcoin off the exchange. Check out the link in the show notes. That'll get you 20% off your BitKey, or use the code TFTC20 at checkout.